Micron Technology is being talked about everywhere, and rightly so. This memory and storage solutions beast just finished one of the wildest years in stock history, rocketing over 250% to all-time highs around $295. They posted record fiscal 2025 revenue of $37.4 billion, sold out HBM through 2026, and crushed fiscal 2026 Q1 with $13.64 billion in revenue and an EPS of $4.6, beating all estimates. The Q2 future guidance is even better, almost twice the analyst estimates. Now, the question becomes, is it heading to $400 in 2026 or is a massive correction incoming? I'm Shubham, and today we are analyzing Micron Technology against my 6-factor framework, starting from their business model to their financial statements and all the way to their leadership. Feel free to skip the part that doesn't align with your investment style. First up is their business model. Founded in 1978 as a tiny 4-person semiconductor design firm in a basement, Micron started small but dreamed big. They broke ground on their first fabrication plant in 1980, shifting from consulting to full-on manufacturing in 1981. The 80s and 90s were all about scaling up, becoming a key player in DRAM and NAND memory chips amid the PC boom. Fast forward to today, Micron Technology stands as a leading designer and manufacturer of DRAM and NAND flash memory, essential for data storage and processing in everything from mobile devices to hyperscale AI data centers. Fiscal 2025 marked the pivotal year with record revenue reflecting a 49% year-over-year increase and signaling a profound shift toward high-margin AI-driven segments. The business model centers on two core revenue streams, DRAM contributing approximately 78% of sales and NAND flash comprising remainder. Within DRAM, high bandwidth memory has emerged as the star, powering AI accelerators from Nvidia's Blackwell to AMD's MI series by delivering ultra-high speed and capacity to eliminate GPU bottlenecks. Looking at their major business decisions over the year, early on exiting non-core ventures like Micron Computers to laser focus on memory. The Elpida buy in 2013 was a game changer, making them a top 3 global player. Most recently, the bombshell exiting the consumer crucial brand by February 2026 to go all in on high margin enterprise and AI, ditching volatile retail for sold out HBM contracts through 2026. Massive capex ramps to $20 billion in fiscal year 2026, also leveraging CHIPS Act billions for onshoring, planning up to $100 billion over 20 years, creating 9,000 jobs. These moves shifted Micron from cyclical commodity king to AI infrastructure powerhouse, with gross margins hitting 41% in fiscal year 2025. Micron's model now aligns perfectly with multi-year AI infrastructure build-out, minimizing old volatile risks. I'm scoring their business model a solid 9.5 out of 10. This refined focus positions Micron as an AI enabler rather than a cyclical player. Now, factor 2, financial performance. Even great models mean nothing without numbers backing profitability and growth. Micron's 2025 financials represent a historic breakout, reversing prior downturns into sustained profitability. Fiscal 2025 revenue reached a record $37.4 billion, up 49% year-over-year, with margin increase driving unprecedented earnings. Looking at the year-over-year revenue trends, in fiscal year 2023, they reported $15.5 billion. In 2024, that grew to $25.1 billion for a 62% increase. And for 2025, they are at $37.4 billion, marking a 49% rise, meaning their revenue has more than doubled in just 2 years. Q1 fiscal year 2026 delivered a $13.64 billion revenue, 57% increase year-over-year, alongside adjusted EBITDA of $4.78, surging 167%. Operating margins hit 47% with free cash flow at record levels despite elevated capex. Q2 guidance points to $18.7 billion revenue and an EPS of approximately $8. Analysts forecast $30 to $32 EPS for fiscal year 2027 as margins approach mid-50s, powered by bit shipment gains and ASP increases for shortages. Balance sheet strength shines, with total assets growing to approx $86 billion, with total liabilities staying under 1/3 of its total asset at $27 billion, which leaves their shareholders' equity at approx $59 billion. Their fiscal Q1 2026 current ratio is 2.46, showing strong short-term liquidity. The only concerning thing is that it's currently trading at 13 times its EBITDA, which is a bit expensive. I give their financial health a 7.5 out of 10, as the company is currently trading at a premium future adjusted price. If you want to watch the full breakdown of their earnings report, then please click here. Now let's move on to factor number 3. The memory industry is dominated by a few large firms, with Micron, Samsung, and SK Hynix controlling over 95% of DRAM and HBM markets, creating massive entry barriers through billion-dollar fabs and advanced process tech. In HBM, the AI battleground, SK Hynix dominates with 60% share, leveraging early Nvidia partnerships. Micron has aggressively gained ground, capturing 21 to 25% in 2025 quarters, occasionally surpassing Samsung's 17 to 22% share thanks to superior yields on HBM3E, strong qualifications with Nvidia and AMD, and US-based production advantages amid growing tariffs. Micron's competitive edge includes leading 1-gamma DRAM nodes, upcoming HBM4 RAMs into 2026, all sold out industry-wide, and exclusive US status qualifying for CHIPS Act, funding billions in subsidies for Idaho and New York expansions. This geopolitical strength accelerates onshoring amid supply chain resilience pushes. Samsung remains a volume powerhouse with deep pockets, while SK Hynix leads in cutting-edge tech. However, Micron's laser focus on AI segments, capacity redirects, post-crucial exit, and locked contracts provide superior pricing power during shortages. No viable new entrants exist because R&D and capex hurdles are difficult to overcome. Recent shifts show Samsung recovering slightly in late 2025, but Micron's momentum positions it as the fastest gainer. Now, let's look at how Micron is standing against the PASL framework. Politically strong tailwinds from US CHIPS Act delivering billions in grants and loans for Micron's domestic fabs, enhancing onshoring versus Korea or Taiwan vulnerabilities. Geopolitical tensions over tariffs favor US-only players. Economically, AI supercycle accelerates. Hyperscalers capex hit $400 billion in 2025, projected $600 billion in 2026. HBM TAM expands from $35 billion in 2025 to $100 billion by 2028. At 40% CAGR. Global data explosion is the driver for sticky demand. Socially, AI integration proliferates from consumer devices to enterprise tools, boosting memory content per device. Remote work and smart tech is amplifying data needs. Technologically, Micron leads with HBM3E and upcoming HBM4. 1-gamma efficiency gains, reducing power while scaling bandwidth. AI requires ever higher density and speed, and Micron is positioned well to play its strengths. Legally, trade policies support US manufacturing, robust IP portfolio protects innovations, regulatory scrutiny on foreign rivals aids Micron's positioning. Environmentally, fabs are power intensive, but efficient chips aid data center sustainability. Micron is investing heavy in green initiatives amid ESG pressures. Their solid grounding among other competitors and against external factors deserves a rating of 8.5 out of 10. The trial's dynamics favor sustained high pricing in this supercycle. Micron differentiates via US alignment and execution. Before we move on to the next factor, please like and subscribe so I can keep bringing you data-backed insights which could help you grow your wealth. Now, moving on to technical analysis. While this isn't the be-all and end-all for long-term investors, it's a fantastic tool for timing your entries and exits by looking at the price action and market signal. The key is to keep it simple. As of Jan 1st, the stock price is hovering around $285, up over 20% since the earnings release. Over the past 52 weeks, it's ranged from a low of $62 to almost $300, showing the massive potential of this beast. From a chart perspective, the stock is trading above both 50-day moving average and the 200-day moving average, the key short-term and long-term indicators, signaling positive momentum with a bullish trend. The stock's been making new highs on positive earnings report and increased public interest. The relative strength index is just below 70, close to overbought levels, indicating a possible reversal in near future. The increased width of the Bollinger Band signal high volatility, and stock's price is grazing along the upper band, signaling overbuying. If you want to watch the full technical breakdown I did on Micron Technology, please click here. All in all, with high public interest and most indicators signal overbuying, I am rating their technicals a 7 out of 10. It has room to go higher from here, no doubt, but critical indicators signaling overbuying cannot be overlooked. Does this technical setup have you feeling bullish or bearish on Micron? Please share your thoughts in the comments down below. Now let's look at the market sentiment. Market psychology around Micron has flipped dramatically in 2025. It has changed from cyclical revenue fears to AI growth FOMO. Retail and institutional inflows surged as MU outperformed Nvidia, driven by sold-out HBM narrative and record beats. Analysts have also moved it to a strong buy, average targets of around $317. Analysts from Rosenblatt are predicting $500, implying massive potential. Their fiscal 2026 Q2 guidance has added to the optimism of their growth expectations. Crowd euphoria is growing, but is grounded in fundamentals. I'm rating the current market sentiment a solid 8 out of 10. The 2025 rally reflects justified optimism and not pure hype, and it will probably keep benefiting from the increased optimism in the short term. Leave a comment if you too are feeling the FOMO. Now, the last factor, leadership. Micron's leadership is a powerhouse lineup for industry veterans, blending deep semiconductor expertise with strategic vision to capitalize on the AI boom. Under their guidance, the company has transformed from a cyclical memory maker into a high-margin AI infrastructure leader. with record revenues and sold-out HBM supply through 2026. Starting with their CEO, Sanjay Mehrotra, who joined Micron in May 2017 with over 40 years in semiconductors, including roles at Intel, CQ Technology, and Integrated Device Technology. He's a patent powerhouse holding over 70 inventions foundational to high-capacity flash memory. At Micron, Mehrotra has orchestrated a structural shift toward AI, exiting low-margin consumer segments like Crucial in 2025 to focus on data centers. Next up is Mark Murphy, their Executive Vice President and Chief Financial Officer, who joined in 2022. A Harvard MBA and U.S. Marine Corps veteran, Murphy brings over 25 years of experience from finance roles at Delphi Automotive, MEMC Electronic Materials, and Praxair. He has optimized Micron's capital allocation, funding massive expansions without dilution, while expanding gross margins to 41% in fiscal year 2025. Murphy's strategies have delivered positive free cash flow amid record capex, enabling share buybacks and investor confidence. For operations, Manish Bhatia serves as Executive Vice President of Global Operations, joining in 2017 with MIT degrees in mechanical engineering and MBA from Sloan. Bhatia's resume includes exec roles at Western Digital, SanDisk, Matrix Semiconductor, and McKinsey. He has revolutionized Micron's supply chain, achieving best-in-class yields on HBM3E and HBM4, scaling manufacturing for AI demand, and integrating AI into smart fabs. His efforts ensure sold-out status through 2026, with bit shipments up 20% and ASPs rising mid-teens in 2025, directly powering Q1 fiscal 2026's 57% revenue surge. Rounding out with Scott DeBoer, Executive Vice President and Chief Technology and Products Officer, a Micron lifer who joined in 1995 as a process engineer. Holding a PhD in electrical engineering from Iowa State, DeBoer climbed to lead tech developments in 2017 and products in 2019. He has pioneered advanced nodes like 1-gamma DRAM, enabling efficient AI memory solutions. His team has integrated silicon design with system innovations, launching HBM4 ramps and SSDs for data centers, critical for projected HBM market growth to $100 billion by 2028. Their leadership scores a solid 9 out of 10, driving execution that's turned AI hype into record profits. All things considered, Micron has a secure future because of ever-growing memory-hungry AI demands. And so far, they have proven their might with record-breaking revenue numbers and through their business decisions. The competition is low, and even the external factors don't have much influence on Micron. The crowd sentiment is highly optimistic, which can be seen through the chart technicals. Conditions like this create great FOMO, and that's when we need to be careful. No doubt, the company has great fundamentals, and it will most probably rise past $400, but waiting for the stock to correct back to its recent support levels at around $200 or even to its deeper support levels at $160 would be the wise thing to do. What do you think? Are you buying, selling, or holding Micron? Let me know in the comments. Thanks for watching. I'll see you in the next video. Until then, take care and invest wisely.